Happy Monday, everybody. I hope you had a great weekend. Today is August 15, 2022, and this is your Monday market update. This past week was full of eco data, earnings, fireworks, and much, much more. Let's jump right in, recap last week, and get a preview of what we'll see this week. Maybe a little bit less excitement. I doubt it, but a boy can dream. So markets started off strong on Monday on the momentum from the prior Friday's hot jobs report. Add in solid Chinese export data and details of the Inflation Reduction Act. Then a profit warning from the crowd-favored NVIDIA. There was a lower open, followed by a rally of almost 1% by the S&P. But with the CPI number pending on Wednesday, all three indices closed down, just up or down, just a hair on the day. Stocks were higher on the open again on Tuesday on the back of news that the Iran nuclear deal may have made some strides forward. That means more energy, lower energy prices, less inflation. At least that was the read-through. Micron came in as a second semiconductor company in 2 days to announce a negative surprise. Why is that so important? Well, remember, chips are often viewed as the copper of the 21st century. As we've been watching copper as the good read on global growth, chips are another one to watch. They are, of course, in everything. So as global growth goes, so goes chips. Don't forget that Biden also signed a huge CHIPS Act last week. That's the one I told you about. $52 billion in subsidies to help promote U.S.-based chip production. All kinds of company announcements about building foundries in the U.S. We did get some eco numbers that were hot, unit labor costs, but first of all, it was backward looking. And second of all, as I've been telling you, rose-colored glasses are going to read these numbers in a positive light, no matter how negative they are. So even ahead of CPI numbers on Wednesday, this was shrugged off. Ahead of CPI, there was no conviction to pull this market higher. S&P was down about 0.5%. Dow was down very slightly. NASDAQ was down almost 1.25%. CPI day, Wednesday, was the first fireworks day of the week, as we expected. Overall, simply put, it was great for the bulls. The numbers were not hot, not like last month. Core CPI year over year, that was one of the big ones that was being watched, came in at 5.91% versus 6.1% forecast. Headline still at multi-decade high, 8.52% versus 8.7% expected. Month to month, we did see lower headline, down 0.02% versus expectations of a positive 0.2% on the core month to month. Still higher, 0.31% versus forecast 0.5%. Now, if you want to know what all that means, you do have to separate what is good for the market and good for the consumer, really. The lower report was really from mostly energy, which we know the energy component of the CPI was down 4.6%. And I've been telling you, and you've probably been seeing it at the pump, gasoline prices are down for over 55 straight days. So if all you're doing is burning gas, you're much better off. Otherwise, housing and shelter costs still up 0.5%. Food prices were still up 1.1%. But the read from the number was that this may be the turn we've all been waiting for. Overall, the markets read this in as inflation is over, which it is not, but making the turn. Is this peak inflation? The market says yes. I'm not so sure yet. Also, Fed heads Kashkari and Evans both kept the Fed narrative real, pretty much opposite of the market read. They both said they're still in fighting mode, and that one report is not enough to change the narrative. Just to be clear, the read of the market, and even Biden, who proclaimed that there was no inflation last month, is that we have seen peak inflation and peak hawkishness. The Dow was up 1.63%, S&P up 2.13%, the NASDAQ up 2.89%. Could the market make it 2 for 2? The answer was yes. Thursday brought the PPI report. That report was also on the cooler side as far as inflation goes. July saw a slight decrease, 0.5%, and that was lower than the slight increase that was expected. Recall that I always point out the incremental versus the absolute. Year over year is still up 9.8%. The good news for the peak inflation crowd is that this was the smallest increase since October 2021 and the first month-over-month decrease since April of 2020, the month after COVID was declared a pandemic. By the way, can you count how many weeks we've done these reports without saying the word COVID? Wow. Stocks started strong out of the gates on Friday with a tailwind of post-CPI rally, strong Disney earnings, and pre-open PPI. By the way, earnings this day were described as much better than feared. This was Thursday, not Friday. Sorry. Is that even better than? Is much better than feared? Is that even better than feared? Let's hope it is, and that it's enough for this market. Overall, the extended market and yields and commodities bouncing back were too much for the stock, and the stocks rolled over and drifted towards the lower for the rest of the day. The Dow managed to hold on to a small gain, down 30 points. S&P down ever so slightly, 3 points, and the NASDAQ was down about 0.5%. Markets came out of the gate strong again on Friday. University of Michigan consumer confidence is back on the rise. off the lows, and the inflation outlook in the same survey is cooling. Stocks are pretty much off to the races into the weekend to close out the fourth straight week of positive returns for the S&P 500 index. It was up 1.73% for the day, back closing in on 4,300, 4280. Dow was up 424 points, or 1.25%, and the Nasdaq was up over 2% to close over 13,000. For the week, the S&P was up 3.25%, the Dow was up just under 3%, the Nasdaq was just up over 3%. Next week, we're going to get bombarded with retail earnings, huge data to come. Earnings from Walmart, Home Depot, Lowe's, Target, TJ Maxx, Kohl's. They have a lot to tell us. Inventory. Is the consumer slowing down? We always see how holiday sales early and earlier. Will we see Christmas overlap with back to school this year? We have to see what the retailers are going to say. There will also be a pretty heavy lineup of Fed heads: Bowman, George, Waller, Kashkari, Barkin. Not all of these are voting members of the Fed. I hope to expand on that sometime soon. We'll also get the minutes from the last Fed meeting. Last month, a huge release. This month, thoughts are that it will not be so big. We've had so many market moving eco numbers since that meeting. Unless they had their crystal balls out to talk about the what ifs, I don't see that being watched too much. Eco numbers are not so heavy and not the most important ones of the lot this week, but with the market stretched to the upside in the near term and the rose-colored glasses on, we're going to see how things turn out. We'll finish the week with existing home sales, leading economic indicators, Philly Fed manufacturing, and jobless claims. I'm going to do a special video this week on the recent market moves and thoughts on what can go right and what can go wrong. Keep an eye out for that midweek. Here comes another week where it was really going to tell the tale. This market needs some real data to back up a lot of the hope that we're seeing. Yes, we've stopped the inflation rocket from going up for 1 month, but can we see those numbers coming down? Jamie Dimon, CEO of the largest bank in the U.S., J.P. Morgan, had a client call last week. He backed the great consumer for now, but noted that storm clouds are on the horizon. There's nothing that means that Jamie is going to be right, but he's had a pretty good track record. He noted that we've been talking about rising rates, QT, oil, Ukraine, China, soft landing. He placed those odds at 10%. They're not surely good odds, but we'll have to see. We can have a harder landing. Can we have a harder landing and still have a good stock market? There's a lot left to see. For now, stay in touch. And again, this week will be all about retail. Watch for midweek special and come back, of course, on Friday for another planning video. Have a great week.